All right, here we are. We're live again. Unfortunately, KBM could not be with us today. Had a last-minute emergency, but we are back with OSF. Yat Siu has come to join us today. I know it's late where you are, but you said late was good for you. Seemingly work until the midnight hours. We are sponsored, as you know, by DYDX. OSF, do you maybe want to give a couple of lines? We might do something a little bit different as well today.
Yeah, sure. Yeah, as you guys know, this show is sponsored by DYDX. It's a DeFi's, I would say DeFi's pro trading platform. So fully decentralized. It's all governed on chain by the community, with 100% of the protocol fees distributed to DYDX token stakers. Soon to be launched, they're going to have DYDX Unlimited. So you'll be able to have permissionless markets, a new affiliate program, and the Megavolt master liquidity pool as well that acts as a market maker for all DYDX chain markets. So head over to dydx.trade, depending on your jurisdiction. You should be able to access that. And we will stick up a direct link through for Twitter and YouTube as well on that. And we're going to do some trades, right, Mando?
Well, that was the plan. We're going to do some trades. I think my deposit is still on its way. But the annoying thing is literally the market seems to be ripping as we went live there. Like we were going to put on some Pepe long, we were going to put on a few meme coins, and then it's absolutely ripped. I think. Which of these do you like, OSF?
When we were looking at it, we were like, let's go 10x long Bitcoin, and it's literally up like 2%.
I just can't even believe it. Like that was such a nice little setup there. We would have basically doubled our money already. I think Pepe still, right? I think you got to look for one decent open interest. So
yeah, all right, I agree.
I'll put on a Pepe long then. I think our plan is very similar to what we did before. We're going to give out prizes at the end of each week, potentially even each month. We're going to try and run this portfolio up over the course of the next few shows, and see where we're at. I think on the bearish days, we'll give it to KBM to trade. But for today, he's not here, so we're going to go max long, and he's going to get annoyed at us. Okay. I think that is it then for DYDX. We'll maybe check in on those trades at the end of the show. Yeah. Thank you so much again for coming. We've had a number of different types of guests on the show over the last few weeks. It's great to have you on. You're like a veteran now, it feels like, of crypto. How long have you actually been in this space now?
Wow. Well, first of all, thank you for having me. It's great to be on the show. It's I would say, really, we got into the space in late 2017. So, I would say I don't feel like a veteran, although, as I say, crypto is dog years. So basically, it feels like I've been, like every month feels like a year somehow. So yeah, I think all of us can sort of attest to sort of the pace of things here. So yeah, it feels definitely longer than just sort of, since 2017. But yeah.
What was Animoca back then? Why did you actually come into this space?
No, so I mean, we're a gaming company, and Animoca Brands was known as Animoca Brands because we were making branded video games, right? That's basically what we're doing as a business: mobile games, console games, PC, that type of stuff. And our studio was actually involved in helping in Vancouver, essentially helping sort of build CryptoKitties back in the day. And actually, basically the co-founder of that studio ended up actually joining Dapper Labs, or what became Dapper Labs as one of the co-founders then. So that was sort of our entry path. And so we got a kind of quasi front row seat on the development of CryptoKitties. And so we really entered the space because of NFTs. We didn't enter the space because of Bitcoin or sort of Ethereum, sort of the classic OG story. And we were fascinated because of that, because we knew what NFTs, from our lens, the kind of cultural digital property that you could own. Like we think of NFTs as these sort of digital stores of culture. And for us in the gaming space and entertainment and culture space, that meant more to us than sort of, Bitcoin in and of itself, which was kind of a bit more like a digital gold and, a pure financial instrument of some sort, which has value, but was far removed from our understanding at the time. But of course, like with anything, once you get into the world of crypto and Web3, your understanding of the world of finance and money accelerates in like fashion. So our thesis and our goals of the space have expanded since the early days when we first got into the space because of NFTs in gaming. And of course, we made investments in companies like Axie Infinity and OpenSea and of course, Sandbox and that kind of stuff as well, above and beyond sort of building our own stuff.
I mean, you say some of those names. Obviously, they were big. I mean, they were big when we first came up. Has your view of the space changed at all? Like, are you still like an ETH maxi? Do you still have all the same dreams of when you first came in, or is it slightly nuanced now? Like, have you tried a bunch of stuff and see what might work, or what's your view?
So, I mean, first of all, our views are always ever evolving because the space is ever evolving. So we can't sort of, follow the same blueprints back in the day. I mean, for instance, back in 2017, 2018, we placed a broad thesis around that. We thought, I guess what was known as a metaverse at the time, and that gaming would be big for sort of, Web3 and crypto because digital ownership was meaningful and, virtual currencies had many similar qualities to tokens. But of course, those were early forms of understanding. For instance, this was pre, DeFi summer, for instance, which of course became a key trigger point for not just the whole sort of DeFi space, but also for what really happened in Web3 gaming. And that was something that, the broad strategy would have made sense, but the fact that it was actually going to be sort of, a DeFi summer that would actually accelerate it was something that we didn't know 2 years ago, for instance, right? And so you always have to be sort of ready to sort of accept these nuances and flow with that. And we matured from the space as well. I mean, today we have over 540 investments, which probably makes us one of the biggest investors in Web3.
Yeah,
and probably about 20% of them are in gaming, but everything else is really in sort of all sorts of things that help grow the space. And our current sort of thinking around that is, and something we've been trying to tell people around, is that really tokens represent, and these networks represent essentially network effects. So when you own a token, you actually own a piece of the network effect. And we're trying to communicate that essentially as to people to say, well, what's the understanding you're building? What's the product you're building? Because, I think, back in, let's call it, 6-7 years ago, maybe a lot of us would have just said, well, tokens are just a better form of fundraising, for instance, or, it's a non-diluted form of equity, right? Which are all, I think, frankly, wrong concepts. But at the time, that was our broad understanding, and I think the broad understanding of most people in the industry. So I guess what I'm saying is it's ever evolving because it's a new type of asset class. And as we get deeper into it, our understanding also gets deeper.
What's the sort of like scope that you guys look at when you invest in stuff? Is it within primarily like gaming?
Oh, no, it's everything.
It's
I mean,
everything,
we do deep in L1, L2, it's like everything. But the key thing, just to understand, the key thing is, our mission of Animoca Brands is advancing digital property rights. That is a number one goal. And that's something we've been saying since the beginning. However, what the shape of that digital property looks like has evolved over time, right? So for instance, before we were totally, we were never Ethereum maxis. We were just NFT maxis, right? So it's a little bit different in that sense, because we always felt that at the end of the day, culture assets are actually the things that are much more important to us in the long run. But of course, what we're currently in is a kind of economic phase. So basically everyone's sort of focused on the economic capital. So meme coins and all that kind of stuff represent that. But at the end of the day, when you want to build, your reputation, really what you care about is your cultural, symbolic, and social capital. And that we think is best represented in NFTs. So we think the moment of NFTs to become sort of, make NFTs great again, as it were, is actually something that will happen, because of this new wealth class that is created, from the Web3 space that's evolving into it. In many ways, coming in because of fungible tokens first, before they then start going into NFTs, which is kind of, we saw a microcosm of that back in 21, early 22, but it was really just the beginning of that, for instance. But generally speaking, that's why we're also in, all sorts of L1 and L2s and, deep in and sort of, finance and education and anything that we think can help evolve the Web3 space.
So how do you, I understand like the concept of NFTs being the best asset to represent digital property rights, and like I definitely agree, but I still think it's the best like reflection of tokenizing culture as well.
Absolutely.
Even more so than meme coins, I would argue, actually, because I think meme coins are more just like financial nihilism. But we've had this period.
Well, nihilism is a kind of culture as well, depending who you talk to. But yes, anyway.
Yeah, that's true. That's also true. But obviously, we've been through this period of like NFT price action being relatively depressed and NFT volumes being relatively depressed. A lot of the NFT volumes originally came from like PFPs and that kind of stuff, but you obviously had fine art, cultural art, all that kind of stuff. And maybe it's making a bit of a comeback, but like how, like I agree with you, but how do we like measure the success of that theory playing out? Is it purely just like, oh, CryptoPunk's about to 100 ETH, so it's once again recognized, or is it like other thing? Is it like holistic aggregate NFT volumes across the marketplace, including everything? Like, what's the best? Trying to figure out what's the best.
So look, I think the best way that I would like to think of the value of NFTs is around what it means to our reputation as end users, which is something that we can kind of already see, but hasn't really been fully measured because it's not a score. The reason why people focus on financial numbers always is because there's a score, right? In some ways, is it worth 1,000? It's, or is it worth 100? And so immediately you end up getting ranked inadvertently, even if you don't want to, right? So we might say a Picasso is more valuable than maybe another painter, but is it really more valuable? For a certain set of collectors, it might not be, but it ends up appearing more valuable because its financial value is higher. And therefore, through that notion of the price, then ends up having a kind of, like leveling quality, so to speak, right? But, when you think about sort of the way that we transact with most of our cultural items in our life, there are things that are priceless to us that really money can't buy, whether this is a wedding ring or an heirloom or these type of things, that it doesn't really matter what it's worth in terms of, its sellable quality. It's something that is so precious that you'll never sell it, and it becomes something meaningful to this particular network that could be just as small as your family, for instance. And that's actually what I think where the space is evolving to. The other thing, of course, to not forget is that, we think of Web3 broadly as a new wealth category and a new wealth class, right? So this isn't the case where people from, Wall Street bankers or Silicon Valley tech bros, basically sort of said, hey, let's do crypto and make money in this and then entering the scene. This is, to me, just the same way that, when 30 years ago, Silicon Valley tech guys started making a lot of money, really what they did was they were a new wealth class that basically came into an existing established sort of group, and sort of the Web3 crypto guys are that category too. And their status objects and their cultural symbolic capital that they want to represent themselves with are actually in the form of these sort of digital culture assets like the NFTs of the CryptoPunks and Bored Apes. So frankly, from my lens, I mean, it wasn't that long ago where I loaded up again on a bunch of sort of Bored Apes, for instance, not just because, I'm big fans of them and we're also investors, but because of the fact that I think that they represent a certain type of sort of culture that I think is representative of, the NFT movement and of this particular group of people, that if you, made it, so to speak, in Web3, then you'll want to own a CryptoPunk or Bored Ape, amongst a plethora of other things. But these would be the type of prized assets because culturally they will always have that meaning. It's kind of like, to some people, for Cubism, it would be Picasso, or for the Renaissance, it would be Da Vinci, right? It has a similar type of meaning. But right now with meme coins, to your point about sort of, the sort of economic nihilism, we're at a point where most of the emphasis is around economic capital, which is the base layer. Right. And then from those people who end up succeeding at that base layer, they want to then say, okay, it's kind of like in the real world, right? Once you have a certain amount of money, you won't get measured just simply by how much more money you have, because what's the difference between, X millions versus Y millions? But rather you want to represent yourselves in the way that we do in the physical world as well. Does he have a rare Birkin bag, or does he have a certain kind of car, or does he live in a certain area? That's basically where NFTs will go. So I think, NFTs will actually grow much more as a result of that, because we're going to see the same evolution. If you believe that, we're going to onboard billions of people into crypto, which we think will happen, particularly when you see what's going on, for instance, with Ton.
Yeah. Okay, go ahead, Michael.
No, I was going to say, I feel like that trend is something that kind of ebbed and flowed. It kind of died away and then it's started to come back a little bit. Obviously, you start to see some of the really higher price stuff from that era start to trade again, and it's come back relatively strong, and people are saying that. I do feel like this trend seems to be stronger in Asia than it does in the US. Like, it feels like
not surprising though, right? Given the fact that the US has been, borderline hostile, or depending who you talk to, very hostile towards, projects in the US. So, Asia has been the center focus really, because here in our part of the world, the government has actually welcomed NFTs. I mean, just even the last prime minister for Japan, for instance, made metaverse and NFTs part of his national agenda, and the new prime minister was just appointed, just basically put NFTs on his roadmap as well. I mean, again, right? These are things that they've all sort of put forward. Whereas right now, I think even in the US, depending on who wins, there's a little bit of a question mark. What's going to happen, and everyone's sort of waiting. Although personally, I think my view is that regardless of who wins, I think crypto and Web3 is here to stay and grow in the US, just because of when you take a look at what happened with sort of Fit 21 and SAB 121. To me, it does feel like crypto is becoming much more of a bipartisan issue. But of course, it's something that will take time. So it's not surprising that Asia is at least leading for the time being.
Yeah, I feel like they're going to come back strong. My question as well was that I feel like that's a trend where maybe a lot of this audience is still in. We came from the NFT cycle of, like a lot of the people who follow us, we obviously have NFT projects, that sort of stuff. You invest, like you said, you're one of the biggest VCs now in the whole space. What trends do you think, like, the average crypto user is missing right now that you're investing in, or that you can see as forming a trend?
So one of the big trends that we see is essentially institutional backing, which is something that I think most people still ignore. And the reason why I think institutional backing is so important right now, which basically means that the project in themselves, irrespective of what kind of project they are, need to be institutional grade, which is not really what crypto used to be like. It's a little bit like the early days of the internet, guy working out of the garage, building some cool products and building some cool shit. But at some point, if you want to build a business of a certain scale, you need to be able to appeal to the institutions, not just for funding, but for whether you go IPO or whatever. You need sort of certain kind of maturity in the space that will attract a certain type of investor if you want to grow to a certain type of business. Again, I'm not saying you have to be that business. It's just that if you want to, right, then you need to be institutionally ready. That was, by the way, not a narrative that was very popular in the crypto space, up until a few years ago. And I think it was really heralded with the Bitcoin ETFs, right, where, that brought in the attention. And now, remember, Pump.Fund alone is responsible for 2 million meme coin launches this year alone, and probably 3 million by the end of the year, right? Who knows, right? So what we have is the entire altcoin space as a broad market actually is increasing over time, right? So we're actually almost $300 billion higher than we were a year ago. However, it's been broadly diluted over millions and millions of new tokens. So that's why, when you look at Bitcoin, for instance, and you look at Ethereum or Solana or even Ton, they've done quite well. But when you actually take a look at, for instance, the average sort of token project that used to have, a lot more attention and price action 2 years ago, it didn't seem to recover the same way, right? So it's like, hey, well, if Bitcoin is up 300%, then why isn't this other token that was sort of a star 3 years ago doing the same thing? And the answer is because essentially there's attention dilution because of that. And what's the difference between Bitcoin, Ton, Solana, and Ethereum? They have institutional backing, right? And so as a result, I think when you're looking at that, that's a trend that is, I think, something that will absolutely become bigger and more focused, which means that if you are looking at a token project, right, an institution will never invest in the meme coin, right? That's just not something they can do, right? And that's okay, right? Again, they will play in a certain kind of, battleground, and that's fine. But if you want to look for something that an institutional investor is going to back and look at, then you have to look at, the management team, the background, and these are things that people didn't have to look at before, and now they do. I think that's a big trend area, regardless of the project. So that's kind of one area. The second one, of course, with our own Mochaverse, which is also one where we have been sort of playing very much the institutional angle, is also on sort of reputation. So that we think that building in reputation and creating sort of the type of reputation that is something that can transfer from project to project is actually something that will make the space better, right? So in simple terms, for instance, let's say you own a Bored Ape, and do you want the customer that flips his Bored Apes all the time? Or do you want the customer that's never sold his Bored Ape and actually is a loyal holder and active community member, right? I mean, that's a simple example, but this is how it works in real life. In real life, we have certain type of reputation we build up over time. Whereas in crypto, actually what happens often, we are actually sort of, creating new identities all the time, because there's no consequence of having a reputation from before, like airdrop farming or bot farming. This is one of the problems, right? But if I actually end up being a user and I know he's a good user over several years or several, whatever period of time, I build a reputation framework. I can then basically carry that forward. Every other project will want that customer that has a better reputation, just as we have in the real world, right? So I think that's going to be something that will create a lot more trust in Web3. And that's kind of what we're trying to build with Mochaverse, starting with our portfolio companies that are essentially injecting their reputation frameworks into the ID layer for these users, for instance, right? And we're seeing some of that effects as well. And then, of course, the other thing that we're also doing is on education. I think, education is not something that I think will sort of develop rapidly over sort of the near term, but I think will be a very fundamental long-term thing. And of course, we're big backers of Ton. We're one of the largest validators, if not the largest validator in the Ton ecosystem. We think that's going to be one of the big sort of ways in which we onboard hundreds of millions into Web3, because essentially they open up the distribution rails that was not available to us in our industry before.
Yeah, can we talk about Ton a little bit? Because I know that's been a massive trade for you. Tell us, paint for us the bull case for Ton. Like, why is this going to 100 billion? Why is this going maybe even to challenge some of the bigger names?
Well, so first of all, it goes back to our initial thesis as to what is a token. And to us, a token is a representation of a network effect. So the bigger the network effect is of whatever ecosystem you're building, the more value the token will have at the end of the day, right? And by the way, network effects are not binary, right? So meaning they don't just have to be a measure of how many people are using it, because not every user in the network is a good user, right? And if every user is the bot, then that network's not worth anything, which we've seen as well, right? So again, so it's a matter of the real user, but also the kind of value a user offers, right? So for instance, we can see it in terms of, for instance, you could have 100,000 people that are worth millions of dollars each, and that network is more valuable than a network that has maybe 100 million users, but they all live kind of like North Korea, right? So just to illustrate that that network effects are relative. So it's not just based on size; it's based on power of the network effect, right? So I would argue that for instance, Ethereum is an example of a network effect that has net power per user, rather than having net usage in the classic sense, right? Because every user on Ethereum has a certain value, respect, and sort of net worth that is more higher than other ecosystems. So just important to understand that part, right? So, and therefore, if we look at the value of a network, and then what is Ton? Ton is essentially the proxy for the Telegram network, right? And so and you don't have any other way of accessing the network except through Ton, right? And therefore, Telegram at almost 1 billion users, to us seems like a pretty obvious use case in terms of, hey, you want to avail yourself to the network effects of Telegram. To do so, you use the Ton blockchain. I mean, what would that be worth if you could have a framework for that for, is it Apple? Is it Google? Is it Facebook, right? That to us is basically what this represents. And unlike other messaging platforms around the world, Telegram doesn't actually have a revenue model that's sort of separated. The revenue model is really tied to Ton. So they're sort of glued to the hip, as it were. So it's very value aligned, and so that makes a lot of sense for us as well. And our own Gamey project basically amassed 100 million users just because of Telegram, for instance, right? And whether it's Hamster Combat, Catizen, or all the other sort of projects that are launching on Ton, they're availing themselves to these users, and basically in so doing, growing the Ton network as well. So that's the bull case. And before, we couldn't grow our users in Web3 because Apple and Facebook and Google and Steam all blocked us, right? I mean, remember, if you've got an NFT in your game, Steam won't publish you, at least if they find out. And Apple most recently said it's okay to have NFTs in your application, you just can't have utility, which basically kills every web NFT game, right? So again, all these things have been restrictions, and Telegram has lifted that. So and the reason we invested in that is because we really believed that they could help onboard hundreds of millions of users into Web3, which will then hopefully give it a kind of escape velocity where you can't sort of stop it anymore.
How sustainable do you think the Telegram games can be, like all the sort of clicky type games?
Well, I mean, to me, it's not that different from mobile games 2009, 2010. I mean, Mafia Wars, Angry Birds, like all these things, right? They were very simple type of games. And remember, once people got into it and, and sort of learned about, oh, you could play a mobile game, then, hey, what are other games I can play? And what are other things I can do? And I think the same thing here. The only difference here is it isn't about the mobile application. It's about, oh, now I have a wallet, and now I can do something else. And maybe I can do something with the token. And hey, how do I use this in this game or that game? So to me, that's actually how I see that evolving. I think the other thing we shouldn't forget is that, in the mobile gaming space and the mobile sort of application space, it really grew because of a new type of gamer. The mobile gamer, the sort of single, sort of using the finger type of play gamer, was actually really only because of mobile, and brought the gaming industry from what was maybe 400 or 500 million people to the billions it is today, 3.4 billion people to be more precise. But of the 3.4 billion people, there's close to 2.5 to 3 billion people who are not playing games today. And it turns out that many of those people, whether this is what happened with Axie or even with Telegram, are actually people who are now playing Web3 games, maybe because of more of the financial nature, because that interests them more, but they're actually starting to learn about gaming that way as well. So we shouldn't be looking at Web3 gamers simply as, oh, how do I take the people who are already playing games into the Web3 games? That's one component. But it's actually more about bringing an entirely different class of gamer that actually never enjoyed the games that they have today, because for them it might seem pointless or meaningless, to actually now have some kind of value component attached to it. I mean, I don't see it that different from, how many people in our industry, came from poker, for instance, because they were both playing games and understood money. And that relationship basically made it easier for them to understand the nature of crypto, which, for instance, for traditional gamers might be harder, because even though they like playing games and their virtual currency, they actually lack the financial literacy that was necessary to really fully sort of get into Web3.
Do you see a world where crypto games or games with interoperable currencies in the form of like crypto tokens, etc., are like the most popular games rather than traditional games right now? And I know like you've had stuff like Axie Infinity, and then we've had, obviously there are now lots of different like crypto games and a lot of building going on there, but there hasn't really been anything that's broken out into like the mainstream world. And then right now in the mainstream world, you have AAA games like GTA and FIFA and all that kind of stuff, but they don't seem to have a need to jump into crypto just because like they make so much money anyway. But do you see a world
Depends
where
where you are? Depends where you are. So for instance, in America, that's true. So the Activisions and EAs are sort of not touching that. But in Asia, Square Enix, Sega, Nexon, Netmarble, Krafton, the guys behind PUBG, right? I mean, they're all basically doing something Web3. I think the reason why we haven't seen the type of breakout from those companies, which, by the way, I don't think it'll come from big studio. I think it'll come from the smaller studios. In the same way that mobile gaming didn't come because EA or Activision had a big mobile gaming hit. It's because some studio created something and basically disrupted the space because they're not sort of tied to their sort of incumbent old structures. One of the struggles that a traditional large gaming company has is that actually, to be successful in Web3, you have to be decentralized and you have to be essentially very open. And that kind of goes somewhat against the spirit of most gaming companies, where their networks are very, very much closed. And they're sort of building network effects that are much more one-dimensional in comparison to, like what's the biggest two games in the world is actually, interesting enough, Roblox and Minecraft. Right? And what do they have in common, really, is the fact that they actually have very natural network effects that they construe, because every user builds their own gaming experience and brings people into that. That's kind of, by the way, the whole sandbox thesis as well. But if you're basically building a game where you're not building strong network effects from within the players themselves, but really just from the game. Like, for instance, if you're playing a single-player game, the network effects are just not that big. And so it's a good onboarder. But then the big question isn't the game itself. It's more about, okay, so now that you brought all those users, what do you do with them? And where do the networks form from there? Because otherwise, basically, there's no network effects that are formed, and therefore no value in that ecosystem that are being built. But I do believe that over time, basically Web3 games will be significantly bigger than any other games that are out there. And I think that, we kind of see this today. Some of the biggest games out there are mobile gaming companies that are bigger than many of the PC and console gaming companies out there.
So you invested in Axie Infinity, obviously, early, which was, let's say, the biggest game, and still is a massive ecosystem, right? Community.
Because of Ronin as well.
Yeah. Do you see something like that happening on any of the specific Telegram games? Is there anything you would advise people what should they be doing, like to make money, get involved? Like, if they are looking at more from a financial standpoint, like which do you see like a big ecosystem forming, or a particular game that you think, right, this is going to be a big one, just like you saw then with Axie?
So first, I mean, for Axie, obviously Ronin, and we're also in Pixels as well, which basically launched in Ronin and did very well. Like that's kind of where you see an example where the network effects are building, and now Ronin has become a very sort of successful gaming chain. But in terms of numbers of users, of course, nothing compared to Ton, just because there's not many users. Right now, what you're seeing, I think it's always hard to sort of say, hey, here's this one game to look at or that one game, because from our lens, right, these are projects that you need to, they're kind of in the early stages of sort of proving out that they can. Right now, Ton is all about proving that they can acquire customers, which they're doing wonderfully, right? The next step is going to say, in terms of roadmap, is to say, okay, so now that I have all the users, what happens next? What is the narrative around that? So obviously the one that we're sort of focused on is what's happening with Gamey and What, right? Which is sort of a smaller launch, but it has millions of active users. But of course, you look at Hamster Combat, you look at Cadison, Cats, all these type of areas. These are projects that are launching as well. But really, I see them more as, if you're a user that's interested in the space, participate in the application and essentially sort of, participate in, the network growth of it and earn tokens from that, right? Because there's no sale of tokens per se, until they launch and they go public from a token launch. And then once they're launched public as a token, really at that point, it's hard to know right at this moment in time what their next plans are, right? And so therefore, I would say that many of them have much more of a speculative flavor for the time being. However, what they do have in common is that all building on Ton, right? So if you want to do a macro bet, then obviously Ton is the easier one. It's kind of like if you believe in meme coins, then maybe Solana is a good bet, right? Because Solana is the one that's pumping out all the meme coins. And if that's what you think is going to be successful, then obviously having a stake in something like that would make sense as well. That's kind of the macro play. But if there's some, and everything is do your own research. If you actually like what this team is building and you trust them, then obviously you look at, I wouldn't say there's one or, particular project. For us, it's Gamey and What is one that we're quite focused on. But again, this is not sort of trying to sort of say, or look at that one per se. There's many other projects that, need to appeal to you.
And you started in crypto in 2017, which is now, well, is this 3 or 4 cycles? We kind of, this cycle felt like 2 cycles in one, but
feels like a dozen. But anyway,
what advice do you think you have for like being multi-cycle? Like, what did you learn from each successive cycle? Which was your most successful cycle, you would say? And like, what do you now have, like rules around investing, rules around the sort of things that you look at?
So first of all, I mean, we're bigger as an organization. So when we first went into the space, we were like, 100 something people, and now we're like over 1,000, right? So obviously that changes the framework of how we think and operate. But, the general sort of, first of all, I would say we don't have a sort of classic rule in terms of here's what we must look at, because the space evolves and also our thinking evolves, right? So if you had asked me back in 2017, 2018, what is a token? I wouldn't have given you the answer I'm giving you today, which to us is the representation of a network effect, because it required our insight and our knowledge and our sort of research in the space to get to this point of thinking. And who knows, maybe next year or two we'll have even more insights about this stuff, right? Like, we're not standing still, right? Because this is an ever-evolving space. I mean, just think about the own insights that you have had over the space, good and bad, that has evolved your thinking, right? So we can't call it sort of a blanket rule. Right. I think the one thing that I would say, if I was to sort of generalize, is that it's very, very hard to back a project and a founder who isn't really believing in the ethos of Web3, which is basically at its heart around sort of, decentralization, which is actually a form of distribution of power. Right. So in other words, the more you try to cling on to a power narrative to control what you're trying to build, actually the harder it is to sort of find success in Web3. I'm not saying you can't manage it, but I think philosophically you need to be much more around open and sharing the network. Because unlike Web2, in Web3, because of its permissionless nature, you can't really build a monopoly, right? In a classic sense, right? You could always be subject to some kind of sort of vampire attack of some form or the other. I mean, just look at OpenSea, for instance, right? It's just sort of one example, but there's tons of them where if you want to vampire attack any NFT community, any token community, you could do so, right? Here's an airdrop for you, right? What happens after, you got to deal with, but so you don't have your traditional moats that you have in Web2. And I think, maybe one of the lessons that we definitely learned is that bringing someone who's really successful in Web2 into Web3, if they don't understand that, they won't find success in Web3, because they're trying to essentially build, a walled garden. They call it open, but it's an open walled garden, right? This is kind of what we see a lot in this sort of Web 2.5 narrative, which is one of the reasons why many of the gaming companies, the large ones, struggle, because when they're trying to do something in Web3, they're not really building it as open as they should, right? Because actually building open means that you have more community ownership. Having more community ownership is frankly more decentralized, less control, but then you have more stakeholders who care about the success, right? It's a different way of thinking about growing the ecosystem than in the traditional space. So that's probably one of the insights that seems universal, comparatively speaking, over the last sort of 6-7 years.
Yeah, I think Ovi would agree with that. Like he's always like, right, we need to find a way to make sure the community gets stuff for free all the time. In fact, pretty much everything Ovi's ever dropped has been for free, and then built a brand around it. I guess you would it does just feel like if you're a founder in this space and you don't get that early on, that people like free stuff to build a community, and then you have a much bigger community on the back of it, like you can fail pretty quickly.
Yeah, and by the way, I don't know that they always have to be free, right? There's some projects that have charged a little bit of money or some money and also have seen success. I think the point is that, what's the best way for you to build a network, and then to build a network of people that have, create a network effect within, right? And this is the problem I think a lot of well-intended projects that don't understand the space have also fallen flat on, because they may have had a great project and then they were basically bot farmed 90% of the time. And so the result is that you actually have a weak network, because the people aren't actually a community. They're basically just AI bots that are basically just trying to extract value. And then essentially you have a wasteland, right? So these are things that, obviously can be addressed with whether it's reputation or other mechanisms. But it's something that, again, you need to understand how it works. Otherwise, you won't be able to build the kind of network effects that you hope to.
What do you think of VCs at the moment? Like, I think there's been a lot of questions about VC funding in the space. It's dried up a lot over the last, as in, let's say VC deployment seemingly has dried up, and there's been a lot of questions about how the VC model even works with like the new way that tokens are forming, like you just said. Do you still think, like, do you think it's fair criticism? Do you think like this whole low float, high FTV criticism is fair? Do you think it'll come back and people are just like obsessed with meme coins right now? Like, what's your view on that stuff?
Yeah. So first of all, I don't think low float, high FTV has anything to do with anything. And I think first of all, there's definitely criticism for some projects that do that, but I don't think it's because of low float, high FTV or whatever, or the fact that they're VC backed, right? Because again, I go back to the fact on sort of how do you gain attention in the space, and I think the institutional backing becomes important, and the nature of the project becomes important, because if the project is, for instance, one of the reasons why DePIN has become a narrative, that's easier for institutional adoption, because an institution understands DePIN, right? And it says, okay, I get it. You're having Wi-Fi routers, or you're creating CPUs, or like it's easier for them to understand it because it says narratives that are essentially parallels in the real world, whether this is hosting, file storage, or networks constructions, whatever that may be. And so they've seen more, let's call it steady backing, than say like a meme coin, which obviously clearly is not designed for institutional backing and support, as an example, right? And it doesn't really matter whether this is DePIN projects aren't out there basically sort of playing some kind of so-called fair launch float, because it doesn't make sense, right? Because you actually it costs money to build out an infrastructure. So again, I wouldn't. It's not a one size fits all, but I think it has a little bit to do with narratives around the space, because they look at this and say, again, they look at the altcoins and they say, oh, it's done badly, but in aggregate, it's done well, right? As the research shows, it's it's up by like close to $300 billion. It's just diluted over 2 million tokens. So what's the differentiator between them? It doesn't have anything to do with sort of low float, sort of high FTV. It has more to do with the fact that how does one project gain attention vis-a-vis another one? 3 years ago, around 21 and maybe even early 22, the number of gaming projects that were actually reasonable, you could count, on one hand probably. Okay, so therefore, why should we be surprised that essentially they've gained all the attention on these projects, and therefore the tokens have done well, relatively speaking, right? But if you were going to take all the gaming tokens and add their value together, they're probably larger than they were in many cases as an aggregate, probably have more liquidity, have more volume. However, no individual project is going to be quite as large, because they don't have that sort of concentrated attention because there's hundreds of gaming projects out there, for instance, right? So I think that's different. And then how do you stand out comes down to the institutional backing and, of course, the utility of the token and the project itself, right? To me, this is a normal type of evolution in the space, right? I mean, this is something that you mature and I tell people as well, Axie is not doing so well. $2 billion market cap. That seems okay to me. I mean, where do we come off thinking that if it's not worth $20 billion, it's a failure? This is a 21 narrative that we can't be sort of, because it's like Bored Apes as well. Everyone's like, oh, NFTs are dead. Look at the price of Bored Apes. That's because Bored Apes was 90% of the market, right? And now Bored Apes is, important, but it is not 90% of the market, because you've got Pudgies and Mocha, and you've got Mad Labs, and you've got all sorts of other things out there that are sort of creating a more balanced ecosystem. And you've got the Ordinals ecosystem as well that didn't exist before, and you've got Solana as well. All these things, so the market's just become more diverse and it's become just more open. That's all.
So you think, and it's probably quite fair. Like if you actually even look at some of the gaming tokens, even from 2021, they're all kind of still pretty big. Actually,
yes,
probably cut up well.
Yes, exactly. I mean, I haven't looked at. Let's take a look and see. But what's Axie's market cap, for instance?
I brought it up because Hamster Combat didn't do VCs, right? And
Hamster Combat didn't do VCs. No, that's correct. Yeah.
And there were a lot of questions about that, like, everyone was happy going into it, and then hasn't really worked out. Friendtech was similarly kind of right. We're going to do no VCs.
Yeah. So by the way, this is the part where I'm not. So not just out of self-interest. The reason why I think the VC argument is important because you do need someone who holds a team accountable. So, for instance, look at what happened with Friendtech. I mean, seriously, I don't usually swear, but what the fuck was that, right? Mm-hmm. I mean, it's like. So I mean, first of all, not great for the reputation of our space. And if you had institutional backing, it's okay. Projects fail. That's normal. But the way you I think Friendtech could have been a platform that someone else could have built on, or do something else. Or there's a community there that's like, what the hell just happened there, right? As an example, right? And I played around and I put some money into sort of the Friendtech ecosystem just because I want to have some fun and learn about it. So I'm not sore about that. It's just more like I'm sore about the fact that our industry is facing essentially a lack of accountability time and time again. And I actually think the roles of VCs, the good ones anyway, is to essentially sort of say, hey, you know what? If we put our name to this, we're going to try to make sure that at least, there's not going to be sort of funny business. And, we can try to give it an earnest shot. Again, recognizing that projects fail, that's normal. But at least we're not going to have this type of sort of, behavior that I think is damaging to the reputation of our space, right? And so I think there's a role to play there as well. One thing that has changed as well, though, and I think this is the nature of crypto, is that I think more VCs will have to start looking at liquid funds like what we have as well, right? Meaning that we shouldn't be looking only at sort of getting into seed and early stage, but if we think a project is promising, we can actually take a position in a live token as well, which is what we're doing as well, whether this is Ton or whether...
Rage quit. Oh, he's back.
You're back.
Oops. Oh no, I guess it's the Hong Kong internet. I don't know. Normally it's pretty good. Yeah. I'm not sure why I lost you guys, but
you were just on that obviously. I kind of agree with what you're saying to the extent that I think VCs are slightly changing their role and they'll have to look more at liquid funds. And I think a lot of the criticism was also fair for some of the low float stuff. That being said, do I think that they've necessarily led to bad token outcomes? Like, you're right, particularly things like gaming. Like, if you look through the top 20 game coins, they are not coins from this cycle generally. In fact, the coins from this cycle have not necessarily done that well compared to the ones from last cycle. So it says kind of a lot about it. Do you think it's fair to say though that the VC space is becoming less competitive? Like, do you think there's now just fewer funds?
So I mean, less competitive. First of all, I don't think so. The only thing is where you're looking for money. So in the US, yes, because basically in the US, VCs have fled the space, partially because they also didn't want to sort of look unfashionable, right? I mean, that's the other thing, right? And there was also a lot of attention grabbing going on in AI. But you look at Asia and the Middle East, there's a lot of companies that are still sort of funding projects and being active in the space. Obviously, it's been better for valuations because it was not as competitive. But again, to me, this is just, a natural maturation of the space. There's still billions of dollars being invested in our industry, which, by the way, is way better than other industries, like, for instance, traditional gaming. Has almost no funding going into, in comparison to what's happening in sort of, for instance, Web3 gaming, right? It's like I think it's like a 10x difference, right? For example, right? And I also think that unlike other industries in Web3, the reason why it might feel different is that once you're in Web3 as a user, you automatically become an investor of some sort. If you end up having some tokens and you made some money, chances are you're going to buy or invest in some other project because you're kind of in that space. And that's sort of something that I think is, by the way, I think that's the secret sauce of Silicon Valley. Because in Silicon Valley, the secret sauce isn't the fact that it's got great infrastructure. It's actually one of the worst in the world. Like, when it comes to internet speeds and reliability, it's terrible, absolutely terrible. I would have sort of blackouts on calls, in the middle of Menlo Park, which is ridiculous. You'd think that place, the center of tech, should be much better. However, everyone is an angel investor, right? Whether it's the engineer or whether it's, my son had a startup there. And, for those of you who might know anything about Sun Microsystems, if you're old enough to remember, he managed to him and the team basically got an audience with Scott McNealy, who became an advisor, as an example, right? That's kind of the culture, right? Everyone there is willing to listen to ideas and make an investment and be open to that. And what's the other space like this? It's crypto, right? We're open to new ideas. We're open to do crazy shit, right? We're open to have some fun. We talk about, our investments, like sport, for instance. We sit in a coffee shop and we talk about this. That's what they do. That's the secret of, the Starbucks in Silicon Valley. People are talking about the deals they did. Most other places don't have that. That's why they can't build that kind of ecosystem. Has nothing to do with the fact that there's Stanford. I mean, that's helpful, right? But there's great universities all over the world. Right? It has to do with the fact that you have an audience that is sort of, willing to put back into the ecosystem and makes it part of that. And that's Web3 as a whole. So I think that's really the superpower. So to the point is that now you have a lot more areas of funding because essentially, individuals that have found success will put money back in, right? Yeah.
The KOL rounds being the big one for this cycle. Me and OSF have become a mini PE firm.
Yes, exactly. So it's just changed later, but it doesn't change the fact that you're doing, essentially a kind of VC type of role that didn't really exist. You're evolving, from my perspective, kind of what VCs do. Just to be clear, Animoca was not a VC and is not really a traditional VC either. We invest out of our balance sheet, right? So we don't have a fund in the traditional sense, right? I don't have a VC background, right? And many of our team members don't come from people that have run, venture funds in a traditional sense, right? So again, we're a different type of VC that evolved from the space. We're nothing like the traditional VC, for instance, right? And there's many like us.
Yeah, I think there's a fair point in this space. Is that I think 90%, well, probably 99% of people who come into this space are just traders, speculators. Then there's kind of the VCs, and then there's the 1% of people who are making the tokens, making the projects. And it feels like, I just feel like people in crypto should try and focus on the 1% of people who are making projects a bit more. Like it's so easy just to speculate, but I don't know.
I think this will change though, as more people move into the broad DeFi space, which I think, is already happening. So, Korea is an interesting example of a market where, it's like most actively traded single market in the world. But 99% of its activity is on centralized exchanges, which means the use case basically is focused entirely on one thing, trading, right? If your whole world exists in a centralized exchange, that's the only application you can really have, right? But if you start going on-chain, then the whole world of opportunity starts to open up, right? And so that's really the path. But the conversion rate will be a trickle-down effect, which is very normal, by the way. Like in the gaming industry, when you convert a free person to a paid person, the industry average is 1.8%. And that drives a close to $250 to $300 billion industry. So, it's yeah, but I mean, that it's true for everything, right? I mean, how many people go into a shopping mall and become a customer? not every person, right? Like so there's always that trickle down effect that happens when you bring customers into a funnel, and then the bottom of the funnel is where you end up converting them, right? And that's the same here as well in crypto. I don't think it's any different.
Yeah, I think the ease of token creation has made more people into. I mean, I made my own token. OSF made his own NFTs, right? Like, so it does make things easier. You can try your stuff at it. Just to talk briefly, because I know Animoca is headquarters in Hong Kong. Is that right?
Headquarters Hong Kong. Yes. Yep.
Right. What's it like at the moment? In general, like a lot of people came back from all these Asian conferences, just being like, the buzz is just insane. I don't understand why the US is. So was already here. There, like I know Hong Kong's been a little bit back and forth on this sort of stuff. Does it feel as though that market is about to massively open up?
Yes. I mean, first of all, let me just sort of illustrate just where Hong Kong has been as an example, right? I mean, I'm part of the Web3 advisory task force of the Hong Kong government. So basically, we have people from the industry that are advising government what to do in Web3. That's pretty unique, I would say. And the chief of that is our financial secretary, right, Paul Chan. So just kind of give you an idea of the fact that we're able to essentially meet people at highest positions to basically say what we need in the Web3 industry. There's a 50 million Hong Kong dollars, so that's maybe $6-7 million US marketing grant for if you do a Web3 event. You can, basically try to tap into that grant to promote Web3, for instance, in Hong Kong. And Consensus is coming to Hong Kong next year, for instance, right? Just to give you an illustration.
Wow.
Right? So I mean, just so
you should do a Rekt event in Hong Kong. They're giving out free grants.
I mean, just come in and do stuff. I mean, they're just trying to bring in people and grow that space, right? So and you've got also Singapore, you've got Southeast Asia. So you've got obviously Japan, which has been sort of bullish, and even China, by the way. I mean, it's not that you can trade crypto in China, but Xi Jinping himself has basically put blockchain and Web3 as something that was important for the evolution of the space. And there's a couple, and for China, and the reason why it's so important is because in our parts of the world, Europe is accepted because somehow they don't seem to get it, but in Asia and the Middle East, actually they've already been so co-opted by U.S. technologies. I mean, just think about the influence that a Microsoft or Facebook or Google or whatever those companies have in those spaces, right? For them, it's really important to have basically companies that are of their own building in the space, because frankly, they would hopefully build with their own with the national interest in mind, which is not basically what you have with with the big platforms, right? Like with Facebook really doesn't care about whether things go well in Japan or Korea or in Hong Kong, for instance. They just really care about their profits, for example, right? And so that's an example of that. The other big thematic in our part of the world is de-dollarization, right? The dollar has been heavily weaponized by the U.S. government in one form or the other. And if you're basically a sovereign nation, you want to find alternatives. And again, crypto has become, and digital assets, as they would be, more politically correct term, is actually what is another sort of angle around that. So this, it's not just, hey, this is great for users. There are actual sort of national agendas at stake at trying to push this, and so we feel this, and the industry obviously is being promoted as a result of that. But don't count out the U.S. I mean, I don't know whether this will be post-election right away or sometime next year, but I think the U.S. Is never going to be happy to be second fiddle to anything. So I think at the end of the day, they'll want to try to reclaim sort of the crypto throne at some point.
I think you may be muted, Michael.
Yeah. You think crypto is going to get unbanned in mainland China?
No. So look, I mean, just to be clear, the gateway for, if you were to call it Chinese crypto, will be Hong Kong. It's always been that way. Hong Kong has always been the financial intermediary of China. I mean, most people don't realize that, you can't basically trade Forex or, trade international stocks in China. You have to do it through Hong Kong, for instance, right? So Hong Kong has always been that financial gateway, which makes sense for Hong Kong to become the Web3 hub, basically for the greater China hemisphere, right?
No, I just know it's one of the final things that people are hoping is a bullish statement by year end, but who knows? Look, I think we've really actually whistled through that. We normally do these for an hour, so we're actually coming to the end of it. I know it's probably late for you; it's probably like 1 a.m. But
it's 1 a.m. Yes, but it's okay. It's crypto time. We're all used to
exactly.
it.
Thank you. Thank you so much for coming. Yeah, that was a great chat. Obviously, OSF, do you want to end with the final question?
Yeah, we asked this all, I guess. What's your best advice on how not to get wrecked?
So not to get wrecked. Well, I mean, first, I would say the important thing here is really, I mean, outside of doing your research, I do think that if you don't have, okay, so I go back to the institutional aspect. Looking now more than ever, I think it's important to not just look at who's behind it, but whether they have the capacity to appeal to an institution, or they have some kind of backing that essentially ensures that, you know, there is some more than just them guarding the hen house, as it were, right? I think we're in a scenario right now where, you know, and this isn't about, you know, this isn't about whether sort of, you know, they're doxed or whatever. That to me is sort of a more primitive sort of a primitive narrative. It's much more about, you know, you're dealing with launching projects where you're responsible for people's assets, right? And there's a certain type of responsibility that comes with it. So take it from the lens of course, it's something that you have to be interested in, but and you appreciate, but understand that the project should be backed by a group of people that are responsible, that has other people behind them that can vouch for that responsibility. You know, reputation, I think it's more and more important, because you know, when before you might have only maybe 10 or 20 tokens in your portfolio, you might have hundreds of them. And you know, as much as we tell everyone, do your own research, unfortunately, some people just won't do that. They're just basically going to look at the soundbite. They're going to say, hey, that sounds good. Hey, Elon tweeted something. Let's go in that. And, you know, if you want to just have fun, then recognize that's what that is. That's fun. But if you want to do something more serious, then you have to look at areas that make it serious as well, right? I think that's important, right? And what I like about institution, as much as some people might say, oh, institution isn't that kind of anti-crypto, that kind of thing, you know, but to me, you know, the institutional sort of impact in crypto is less than 10% at this moment in time, whereas in the equity market in the US, it's 80%, right? So I'm not suggesting that institutions should be 80% in crypto, but I think, you know, if we have 50-50, then I think we have a nice balance, for instance, right? And I think everyone in the crypto world that is there already has an advantage because they're there before. It's kind of like Bitcoin ETFs. If you actually sort of have Bitcoin before the ETFs came in, good on you, right? I mean, you benefited from it earlier as well. So I think of this a little bit as sort of an evolution in space, because institutions won't back every project. They're going to be studying projects. They're going to have a long-term horizon because they have the capacity to do so, because they can say, hey, you know what? I think this is going to happen. So when, you know, so I can take a 3 to 5 year lens on this, which is much, much harder to do for individuals which are more sentiment driven. And so I think if you want to create a little less volatility, we need to welcome the institution to come in. And also, therefore, I would say, you know, maybe the added advice on top of doing your own research, which is easier said than done, is to basically look who's backing it, and basically whether the team has the capacity to appeal to institutions.
Awesome.
Fair point.
It's good.
One of the longer answers, but I feel like the VCs that come into this space, just like we just said, there's going to be fewer potentially of the bigger VCs, and they're going to be backing maybe bigger projects. It does feel like some of those are going to be some of the biggest wins, and they already have really been, right? Yeah, dying there at whatever, 7 billion already this cycle, just last week. Okay, thank you so much for coming on. Yeah, I know it's late for you. Maybe I should share our trades because they haven't been going so well. We literally timed to the top of the market as it started. I've been layering into a Pepe long, which we will be doing until next week. We're going to try and run this up. KBM's going to shout the hell out of us for going long, but he's not on the show. So we will speak to you next week. Go check out DYDX. We're going to be doing these trades each week. Hopefully run up this portfolio to a nice amount over the next few weeks and then give them out as prizes. Okay. I think that's it, guys.
Thank you.
Thanks so much for coming on. And yeah, we will see you again next time. Thanks, everyone, for tuning in.
Thanks, guys. Bye.
Bye.